Okay guys, let's get the briefing up and running. Wednesday 20th of December, we're going to be talking bonds in the briefing this morning. Also going to have a little touch on Bitcoin. Also going to be just doing a quick review of 2017 by looking at some charts. But before that, just check the DAX here. So DAX on the move, just moving, obviously we've been moving south since the open. Not a huge move, but now we've just broken that low point from yesterday afternoon. So yesterday afternoon was particularly heavy for the equity space across. There you go. Now the DAX is just breaking that low point that we had back on Monday. So that's a new low for the week here as the DAX touches down on S1. So some further equity weakness. And this is, yeah, an extension of that move that we had yesterday afternoon. And perhaps I should just bring the S&P chart in here because it was the S&P really, or the US equity space, that kind of led that movement. So right from the cash open at 230. Before then it had been very, very slow. If you look at, you know, the kind of range that the S&P was in yesterday morning, I just draw a couple of lines here. We were trapped in this tight band, you know, just a 3.5 point band as nothing was happening, you know, resistance being found at that high point that we had back on Monday, but very, very, very slow. And then it just fell out of bed at 2:30 when the cash market bell rang. Equities chose the downside, broke outside of the range, and then took out some levels as it kind of extended all the way lower right into the close. So actually turned out to be a pretty bad day. I mean, the sell-off was 2,698 was the high, right the way down to 2,682. So decent sell-off. I mean, not massive, not huge, but a correction nonetheless. We've bounced half of that overnight, although, as I said, the DAX is just broken. The DAX is underperforming on a relative basis here. The DAX has just broken yesterday's low, whereas the S&P's, you know, a long way off yesterday's low at this stage, but just edging lower. The pivots next up as support. This kind of sell-off came really out of nowhere in that it was not driven by any kind of fundamental news flow. And indeed, you know, the news flow has been positive. The big news, of course, overnight is the expected positive result in terms of the Senate passing the US tax bill. The vote count, if you like, was 51 to 48. So they've got their majority and it's a yes, and corporation tax is going to be cut to 21%. And you know, this is something that markets have been pricing in really for weeks and weeks now, and so finally it has been delivered. The House of Representatives also voted this through yesterday. However, there seems to be a bit of a strange technicality in that they've got to vote on it again today. There was some factors in the bill that were included that means that the bill doesn't comply with the Chamber's budget rules. But these are just technicalities. The House is going to vote on this again today, and then that is it. The Senate will have voted it through. The House will have voted it through. All it takes then is Big Don to put his signature on it, and it's a done deal. And Trump will finally get some legislation through Congress, which is you know, really the first time that will have happened in any meaningful way, and you know, more than a year since the election. Obviously he came into power mid-January, so he hasn't been in office for a year yet, but it's the first major legislation victory for Trump, and he's delivered on his promise, because a few weeks back he said, I'm going to deliver tax cuts for Christmas, blah blah blah, and so, you know, markets have priced this in, and actually, ironically, really, just as we were getting to the finish line, equities sold off, and so perhaps it's just a little bit of a, you know, pricing in the event, buy the rumor, sell the fact, if you like. But when you're looking on a daily chart, let's just put that sell-off in perspective yesterday. It's nothing. That sell-off is absolutely nothing. We are at the top of a very steep hill that this market has climbed through. It'll just be interesting to see if momentum can last here and we can notch up another positive month to complete the set and get 12 months in a row for 2017 of equity market gains. So A bit of weakness then in the equity space yesterday afternoon. The DAX has just stepped and broken through and closed the gap. I was talking about the gap fill to the stage 1 guys on Monday, and this is what I meant. You know, trading back to trade the prices that it skipped over when we gapped open on Monday. You can see that the DAX has just stripped out all those price points right the way down to test Friday's high here. So quite a nice classic gap fill scenario playing out. So a bit of equity weakness continuing. The big thing about yesterday, though, actually wasn't equities, even though it in the end turned out to be a surprisingly large sell-off that really came from nowhere. Just that cash open move just gathered momentum. But actually, it was the bond market space that got everyone talking, and that's because the sell-off here was meaningful. As I was just saying on that S&P daily chart, yesterday's sell-off was nothing. Well, the bond market sold off and had their biggest sell-off for months and months and months. And actually you got US 10-year here. You can see the steepness of this move that also kind of got going earlier than the equity move. So the bond market sell-off started around about lunchtime, and just, you know, through the space of 5 hours was very pronounced. And when you're looking at this on a daily chart, and you can see technically this is very significant. I was talking about this price yesterday. Well, let me do it on a continuation chart. I was talking about this very important technical price point yesterday during the session. The October low, the November low, the 13th of December low, this 124.06 price, that's got smashed yesterday as we step sharply lower. This is the lowest this market has been since May, or sorry, maybe even March. Actually, let me just go back to a weekly chart. Yeah, sorry, since March. So that's the next kind of target on the downside, if you like, for bonds. It's that March low, and then you got the 2016 low, which was set a year ago yesterday, 123.11. So this is prices down, yields up. So what's going on here? Because it wasn't just the US, certainly bond markets in Europe also had a steep decline. My chart's going to update here, and we'll have a look at the Bund. So basically the bond market across the spectrum had its biggest sell-off for months. Here's the Bund. You can see the size of this red candle is significantly larger than most of the other red candles you can see here. So break of the trend and a large step lower. So this kind of came, people are pointing towards a couple of ECB hawkish comments that kind of got the ball rolling. So for example, McCutch, so ECB's McCutch has said that the ECB said that discussions are increasingly moving from asset purchases to the eventual future use of interest rates to regulate the economy. Weidmann then said, he made a call for a definitive end date for QE. He reiterated his call, and he said a faster conclusion of net asset purchases and a clearly communicated end date would have been reasonable, talking about the meeting last week. And then finally we had Hansen, ECB's Hansen, saying the ECB moves gradually when adjusting policy guidance. That really wasn't very hawkish, but he did say that there's somewhat higher wage pressure. So some hawkishness from the ECB just tipped the balance, and some of this was technical, and it's been a very positive year for bond markets, as it has for equity markets. Maybe just some money coming off the table. We're going to talk about inflation tomorrow in a lot of detail, but maybe you're just seeing people stepping up their inflation expectations for next year, which is leading to long end yields rising. This means the yield curve is steepening. That's kind of good news, certainly good news for banks, if you like. Obviously, we'll have to track inflation into 2018 and just see how quickly it rises, if it does. But yeah, a significant move on bonds yesterday, which kind of triggered, in a way, a significant move on equities, and both markets stepped sharply lower. Let's look at other assets. I'll slide that out of the way. But keep your eye on bonds today, for sure. It did seem to be the market that led most things yesterday, and so far today the Bund's kind of tracking sideways in consolidation of yesterday's sell-off. Let's talk about oil. Let me get my chart enlarged here. So crude's had a positive start, had a positive session yesterday, and has added to that this morning, and you can see that we've we've briefly, if I can get that line into place, the high point that we had back on Monday has kind of been tested. We did move above it briefly, but that was really the high point from yesterday as well. So we've kind of got this Monday, Tuesday double top, 57.82. And so oils, if I go to the daily chart for crude, then you'll see we're still in this kind of consolidation mode, and we've still got this kind of pennant situation. And the top side of that, if I just draw, I'm just going to very roughly draw a trend line just very quickly. We got kind of this pennant idea coming, and we're getting that the price is getting forced narrower and narrower into the angle of this triangle, and we'll see whether the inventory data today can shift us outside of this pennant or not. So on that front, if you have a look at the, let me just bring this up. If you have a look at the API figures from last night, then we had another big drawdown on crude, over 5 million barrels. Big drawdown on Cushing. Is that right? Sorry, it's showing a build on Cushing. Build on gasoline. Drawdown on distillates. So this was the news last night. So a bit of a mixed bag as Zero Hedge are reporting here. You know, a series of crude draws continues and gasoline builds. Okay, that's the 5th week in a row of crude drawdowns and gasoline builds. So we'll see. We'll get the Cushing data later, but certainly oil's still in a positive mode, as it has been, you know, for the last few days. After that sell-off last week, you know, we've rebounded nicely, but in the grand scheme of things, we're still consolidating in this pennant formation, as we have been doing, you know, for the last month really. So we'll get the inventory data out of the US later. Let's have a quick look actually at the calendar for the day now I've mentioned data. And yeah, there's not much here, is the obvious point to make. You know, certainly this morning nothing of any interest. So this afternoon we've got some more housing data. The housing data has been very strong, so the existing home sales numbers at 3 o'clock most likely going to be the same, and this is most likely not going to be particularly market sensitive. So those oil numbers at 3:30 are the main highlight, you would say, on this calendar. There's nothing by the way of speakers other than a risk bank governor comments. No auctions, no earnings. So pretty quiet day from the data point of view. Of course, we're most likely going to get the House, we will get the House of Representatives voting for a second time on this bill, and then it may be that Donald Trump signs it off today. I don't know, maybe tomorrow. We're not quite sure on the signing of that, but it's a done deal. I came across just before we finish, by looking at the charts again, I came across this article on Twitter. Everything you need to know about global markets, and this is kind of looking at 2017. One thing that is of interest is this chart. So this is looking at ETFs, corporate credit ETF flow, and we've seen a drawdown. It's the first one of the whole year. So this is money coming out of the ETF space, the corporate credit ETF space. You can see that these drawdowns aren't very common, but you know, we'll see for January, of course, of 2018 whether we get a back-to-back drawdown, which we haven't seen since actually 2015. So it looks like some money just coming off the table. It's been a very good year. Some year-end profit taking seems to be the kind of mode of things. That kind of sums up yesterday's session for both equities and bonds. This is an interesting chart looking at the length of the business cycle, and we're currently up to 34 months. Number of quarters from start of recovery to onset of next recession. So we've got 34 quarters. Wow, that's crazy. 34 quarters now. So we're looking to take out the 1961 to 1969 record of 35. So we're almost now at the second longest economic cycle in history, going back to, let's just say, post-Second World War. Of course, in the 90s, we had the longest. So we've got, you know, you could say we've got 6 quarters still to go. That's a year and a half. before we match the longest ever period that the US economy has gone without having a recession. So there's still, even though we're at, almost now the kind of second longest ever, there is still scope for another year and a half before we set any, outright records. But it's just to show you, and obviously the US tax bill plans, it remains to be seen how influential that's going to be on growth. But you could say Trump is kind of engineering a situation where this run of form without a recession is probably going to continue throughout 2018. Developing markets post best year since 2009. So it's not just the US equity space that's had a very positive year. It's really right across the spectrum, right across the world. Emerging markets best year since 2009 here. So strong gains across the board, and that's because it's the US and Europe. It's the developed part of the economic system that's finally delivering some accelerated growth, which of course the emerging market space definitely benefits from. I'll just finish with this chart. The euro is set to continue rallying after trouncing the dollar in 2017. It's been a European story this year in many ways from a sort of economic growth point of view. And if we just come back to the charts to finish off, if we have a look at that euro-dollar market, and obviously the hawkishness from the ECB yesterday, those hawkish comments are just a reflection of the fact that the economic situation is the best it's been since the crisis. What we've been doing this morning is kind of chopping around and consolidating around the Monday's high that finally got broken after the European close yesterday, as the euro made its way up above 119, and so we're just chopping around that area at the moment. The next kind of resistance on the upside is that high point that we had back on the 14th, so that's 119.46. But if you're looking on a daily chart, then let me look on a weekly chart. I guess this tells the story. On a daily chart you can only see the last few months, and that's just actually showing you the consolidation. It's the first half of this year that was the remarkable turnaround, with the euro rallying hard, and of course the US dollar suffering as the inflation situation in the US tracked lower. We had Q2 several months in a row of downtrending inflation that led to some dollar weakness, and then we had very strong European growth at the same time. So big step higher for this market, of course. That low point that we had in November was the key test of the May 2016 high. Support found, and so the last few months we've been consolidating. But as you can see from this chart, that article from the Bloomberg, that chart, or the headline from Bloomberg is definitely right. The euro has trounced the dollar. It's just that for the last few months it's been going sideways. So not too much action. The dollar weakened yesterday despite the tax bill moves, and the euro strengthened as a result of those comments from the ECB. Let's just finish by looking at cable. It's a tricky one here because, on the one hand, looking at the Brexit situation, Theresa May has delivered in that she's got past that divorce settlement negotiation, but of course then it's back to, and we'll talk more about this tomorrow, but it's back to the kind of negotiation strategy of when we begin talking about trade. It's starting off by saying we want everything. We want all the cake and we want to eat it. And obviously negotiations will begin on trade next year, and we'll quickly find out that perhaps we won't be able to have all the cake, and we will back down and concessions will be made. But certainly it's been a positive week or so for Theresa May. Finally, she's actually managed to have a positive week in 2017. But for cable yesterday, we stepped higher after the close, but before that it was weak. We definitely had a weak downward trending sterling. That's just when euro dollar was actually tracking higher, but you can see we rebounded pretty strongly. So the resistance point that we've seen overnight came provided by yesterday's high. So just consolidating between that and the pivot at the moment. Right, actually final thing to show you. Bitcoin. Let me just show you what happened yesterday. Here's a chart of Bitcoin into the US close. I think this is US timing here. It took a massive, well, a bit of a flash crash as we broke below 17,000 and slammed down to 14,000 and then rebounded back to 17,000, all in the space of about 20 minutes. Welcome to the roller coaster of a market driven by frenzy. But now we've got Bitcoin on exchange, because here's the chart for on exchange futures, and this is the CME's Bitcoin futures. It opened on Monday, so we've got 2.5 days of data here. That's it. You can't go back any further. This price didn't exist before Monday, and this is how we're looking. We had the break of Monday's low last night, and that opened the door to a big move. Interestingly, the futures only dropped to 16,435 here, even though the cash dropped to 14,000 apparently. Here's our ladder. So we'll we'll put a trade on. You can see it on the chart actually. So this is on the simulator, unfortunately. So Will went short 5 lots as we started to have a look at this. Look at the volumes here. It's obviously the liquidity's just non-existent. You got 1 and 2 lots here on the book. But yeah, 37,000. Actually, it was 44,000 profit about 5 minutes ago. It's now 37,000. Anyway, this is just with a 4 lot. Although going short 4 lots requires $2 million of margin to put that position on. But yeah, $37,000 in profit, catching the falling knife yesterday. But yeah, Bitcoin is up and running on exchange, and so we'll be kind of tracking this movement as we go. But that's it for now, guys. Remember, in terms of data, actually I wasn't showing you the ladder, was I? Sorry, my screenshot was the ladder was showing. Oh, it was showing. Okay, fine. But in terms of data, guys, remember there's nothing on the slate really until those oil figures at 3:30. So keep things tight. Definitely another day for patience. Remember yesterday morning, markets basically didn't move for the whole morning. Patience is absolute king. Then if there is movement, as there was yesterday in these kind of markets, it typically is short and sharp and doesn't last very long, and then we're kind of back to slow pedestrian behavior. So definitely patience pays. That's patience waiting for key entry points. It's also then patience when you're in trades, waiting for markets to develop and move. So patience is the word of the day. All right, enjoy the session. Thanks.